You've probably heard about an FHA loan, but do you know about all the benefits or requirements of getting an FHA loan? Probably not. So in this video, we're going to share with you 3 things you may not know about FHA. Hello, my name is Kevin Brierton with Neo Home Loans. I'm a certified mortgage planning specialist and your no excuse lender. And I love helping homeowners understand the different loan programs available. And I'm excited to share with you the information about an FHA loan, beginning with number one. Number one, the fact FHA is not a mortgage lender. Many people don't realize that FHA is not an actual mortgage lender. In fact, FHA stands for Federal Housing Administration. It's a government agency within the U.S. Department of Housing and Urban Development, or HUD. The FHA doesn't actually make mortgage loans to home buyers. Instead, FHA provides mortgage insurance to banks. So they provide the insurance needed for the mortgages, and they provide that insurance to banks, credit unions, and other lenders who actually provide the home loans to meet FHA regulations and rules and requirements. So you have to fit into FHA guidelines, but FHA itself doesn't actually finance. The FHA acts as an insurance company who reimburses lenders as a part of their losses if the borrower goes into foreclosure because they don't make their payments. This FHA insurance policy from FHA helps lenders extend credit even when you may have lower credit scores or smaller down payment. So basically the loan may be a little bit more risky, but because there's insurance there, it helps the process continue. If somebody does foreclose, the insurance money pays and continues. I've been doing FHA loans for almost 18 years, coming up on 20 years, I guess, 19 years. And FHA is a great program because you do still have to qualify, but you can look at things a little differently. There's FHA manual underwriting loans where you can really look at the overall situation and see if you can make it work for that family that may be in need for a mortgage. And really, when you look at it, we can actually qualify in the overall picture. So that's what's great about FHA. And being insured is nice because with that insurance, it just allows banks and lenders and brokers to provide more help with more stability. FHA loans are typically more stable, whether it's a fixed loan. They do have some adjustables, but they're usually 30-year fixed loans, and they're really good loans overall. So let's look at fact number 2. Number 2, FHA loans aren't just for first-time homebuyers. A lot of people think FHA stands for something regarding first-time homebuyer, but it does not. The FHA loan is often thought of as a product for first-time homebuyers because it's a low down payment option. Although you can put more money down, it only requires 3.5% down. But not all repeat homeowners have excellent credit or a lot of money saved up for a down payment on a home. So that's an FHA program is open to them too. But you must live in the property to get a loan through FHA. So it has to be primary residence only, and it's not for a second home or investment home. The FHA will insure mortgages for primary residence. There is no requirement that you must be a first-time homebuyer to use the FHA loan. Keep in mind, you have to be careful in having multiple FHA loans depending on the distance of the house or relocation. So talk to your lender about that. Very important that you know that you cannot typically have 2 FHA loans. And that's where you'll want to either sell or refinance to free up that availability. But before you do, talk to a mortgage professional to see if that's the right move and if there's other options for you. So let's move to number 3. Number 3, FHA loans don't have income or geographic restrictions or limits. So other than low down payment mortgage programs with eligibility requirements, many are limited to those with very low income, low income, or moderate income, and only have available to certain groups or certain segments of the counties or cities you're in or zip codes. And so on the VA loan, for example, it allows 100% financing, but you obviously need to be eligible for a VA loan to be able to use it. The USDA, the Rural Development Program loan, also allows 100% financing, but this program requires you to buy in a designated rural area, and it also imposes income limits too. By comparison, anyone applying for an FHA loan, they're not needed to be in a certain group or certain income level or certain zip codes. So most buyers of FHA mortgages, most FHA loans only require 3.5% down. And this makes FHA loans one of the most lenient mortgage types in the nation, across the nation. Your down payment money could come from a gift from a family member, employer, charitable organization, or a government homebuyer program like a down payment assistance program. So if you want more information about the whole FHA loan program, check with your current lender, check with us. They can, lenders can definitely provide some additional answers to help you complete an application to see if you qualify, or do a discovery call to figure out your needs. Thank you so much for watching. Again, this is Kevin Brierton with Neo Home Loans, and I am your no excuse lender. I look forward to helping you get your home of your dreams. Reach out to me. You can call or text us at 480-553-8770. Again, thanks for watching. Please forward this, share this, or like this, whatever platform you're on, and we'll see you on the next video.